Ever wondered why the IRS is hated so much? The IRS has a reputation for being the big bad wolf of finance, but it's actually just, well, a glorified tax collector, a necessary evil, the biblical Zacchaeus of modern-day money, small in name but hella impactful. What is the IRS and why does it exist? IRS stands for Internal Revenue Service. Now you know why they sound so bureaucratic, but here's what they really are. The IRS is the government's financial doorman, collecting taxes, enforcing tax laws, processing returns, and chasing down tax evaders. It was created in 1862 during the Civil War to raise money for war expenses. Fast forward to now and it's one of the most feared three-letter agencies, right up there with the FBI and CIA. And rightfully so. They have the authority to freeze your bank account, garnish your wages, and seize your assets. They're basically the Ray Lewis of debt collection. Emotionless, relentless, and always getting their cut. The government needs money, a lot of money, and the most direct way to get it is by levying its citizens. Amongst other things, the money collected is mostly used to run the country. So essentially, when you pay tax, you keep society from collapsing into chaos. The tax is used to build roads, pay military salaries, run public schools, fund Social Security, and keep the White House's electricity bill paid. All that money comes from the likes of income taxes, corporate taxes, payroll taxes, estate taxes, excise taxes. We will dive deeper later. Ultimately, the IRS is an arm of the Treasury Department responsible for collecting and managing that money. When you pay taxes, you're funding your grandma's Medicare and also that next NASA mission. That's balance. How the IRS works. Step by step. Let's break down what the IRS actually does to keep America running. 1. Tax filing. Just like Mary and Joseph had to register back in the day, Americans have to file a tax return every year. It's your financial confession booth. You tell Uncle Sam what you earned, what you spent on deductions, what you owe, or what they owe you. 2. Processing returns. The IRS processes over 250 million tax returns every year. That's like grading SATs for the whole country. But each error costs you money. Literally. 3. Collecting payments. After filing, you'll either get a refund if you overpaid, get a bill if you underpaid. Miss the deadline, April 15th, and you'll get hit with interest and penalties. And no, they won't waive it because you forgot. 4. Audits and enforcement. Only 0.4% of taxpayers get audited, but your risk goes up if your income is super high, you make huge or weird deductions, you forget side hustles or crypto income. Other red flags? Charitable donations that look sus. Too many round numbers, $1,000, $500, etc. That home office deduction from your couch. Audit types? Correspondence audit. Send in receipts. Office audit. You go to them. Field audit? They pull up on you. The money that is collected is distributed into federal programs. About 50% goes to Social Security and Medicare. About 15% on military and defense, about 9% the interest on the national debt, about 9% on social safety nets, food stamps, and unemployment. The rest, education, housing, research, government offices. So yes, your taxes fund both Granny's healthcare and NASA's space robots. The taxes the IRS collects. Here's where the money comes from. Income tax, the biggest chunk. Everyone who earns above the minimum threshold pays between 10 and 37% depending on how much you earn. Next, payroll tax. If you're W-2 employed, Social Security and Medicare are auto-deducted. That's payroll tax. Then you have self-employment tax. If you're self-employed, you pay both halves of Social Security and Medicare, a total of 15.3%. Then there's corporate tax. Businesses pay 21% on profits. Excise tax. Taxes baked into stuff like gas, booze, airline tickets, cigars, aka the sin tax. Then estate tax. Die rich, the IRS gets their piece before your heirs do. And also capital gains tax. Profits from stocks, real estate, or crypto. Long-term capital gains held over a year get taxed at just 0%, 15%, or 20%. Way less than regular income, but taxed nonetheless. How the tax brackets work. Ever hear someone say, "I'm in the 37% bracket," and think the IRS just uppercutted their whole paycheck? Relax, it's layered. The U.S. has a progressive tax system, meaning your income gets taxed in tiers. Like a cake, each slice has its own rate. Let's say you make $100,000. The first $11,600 is taxed at 10%. The next $35,550 is taxed at 12%. The next $52,850 is taxed at 22%. Only the amount within each range gets taxed at that bracket. You'll only pay 37% on the income over $609,000, not the whole thing. The standard deduction. Before you even hit the brackets, the IRS subtracts your standard deduction. $14,600 if single. $29,200 if married filing jointly. That means if you make $60,000 and you're single, you're only taxed on $45,400. Important to note, you don't get punished for earning more. You can lower your tax bill with legal deductions and credits. Tax planning helps you keep more of your money. Some common deductions and credits to take advantage of are HSA contributions, student loan interest, charitable donations, child tax credit, 401k, IRA, and TSP contributions. For self-employed folks, internet and phone bills, home office expenses, business meals, software tools, and mileage. And if you're rich, the IRS stacks capital gains income, real estate depreciation, trusts, tax loss harvesting, offshore accounts. Don't hate the player, learn the playbook. If you get a tax refund, that just means you overpaid taxes throughout the year. Your credits and withholdings were greater than your tax bill. It's not a bonus from the IRS, it's your money. You just gave Uncle Sam an interest-free loan. Want to avoid that? Check your W-4 form at work. It tells your employer how much to withhold. Pro tip, use the IRS withholding estimator to dial it in. Can't pay? Here's what to do. The IRS isn't heartless. They won't throw you in jail for not being able to pay, but they will come for their money eventually. Here are your options. Installment agreement, pay in monthly chunks. Offer in compromise, settle for less if you qualify. Currently not collectible. If you're truly broke, they'll pause collection. But if you ignore them, expect tax liens, wage garnishment, asset seizure. What about crypto? The IRS sees your Coinbase and Robinhood. They now require reporting on all crypto activity. Buy, sell, swap, earn. Don't report it? That's audit bait. Payment apps and 1099-Ks. Starting in 2025, if you make $5,000 plus via Venmo, Cash App, Zelle, or PayPal for goods or services, you'll get a 1099-K. So will the IRS. Don't play games. They're in your apps now. IRS scams to avoid. The IRS will never call you demanding money, text you a link, ask for payment in gift cards or crypto. If someone says pay now or get arrested, it's a scam. The IRS sends letters, not threats. Fun or terrifying IRS facts. 74,000 plus employees. $4 trillion collected yearly. 100 million plus refunds processed. Tax evasion equals felony. Just ask Wesley Snipes. How to stay cool with the IRS. File taxes on time, even if you can't pay. Pay what you owe or set up a plan. Keep good records, 3 years at minimum. Report all income, jobs, side hustles, crypto, everything. Hire a tax pro if your stuff is complicated. So, is the IRS evil? Nah, They're not the ones who write the laws, Congress does. They just enforce and collect. Annoying? Sure. Intimidating? Sometimes. But they're here to make sure America doesn't go broke. Tax season is always creeping up. So, learn the rules, file smart, finesse every deduction and credit legally. Because if you don't know how taxes work, they will work you.